Okay, everyone. Well, we're looking at the pound on an hourly bar, and as you can see, the market fell off a cliff and then has decided to go relatively nowhere. There is a bit of a triangle pattern which the market broke out of just over the last hour or so. You can see support is building here at about the 215 area. If we go up to the 4-hour bar, you can see here that that is just below the prior lows from October. So the overall pattern is forming up inside of the lows from October. So support is holding at this point. I would really think that we're going to get the flag pattern pointing up somewhere like this, coming down over the next few days. The overall pattern, though, of bearishness is continuing. Let me clean up some of these lines here. And you can see generally the pound made a move down, made a move up, and now is pushing down. This is the tunnel pattern that's in the advanced tactics section on the site. And you can see here that's putting the target again down here at about $2, just above at 237. So, you know, we've still got another couple hundred points to the downside. When you see big, fast moves like this, it's very rare that the market does not give a bit of a retrace into the prior area, giving an opportunity to go short, either on the pattern itself, either on the pattern itself or on a break of support. So if we can see the market kicking back up, we'll have probably a couple of entries, one being on a break to the downside through the pattern, the other on a break below the prior low. What do I mean by that? Well, if you look, get this, we had over the last couple of days, if you remember, the pennant pattern which was building. So there was possible entries on a break below the low here, breaks below these lows as well, before the market eventually settled down. It was just a really fast move, and generally speaking, these fast moves will continue. For the time being, the momentum is to the downside. What's important for you to realize is that events and markets are constantly changing. Okay, the pound, let's kind of recap here because I think it's important. The pound coming in through June and July was in a very strong posture. Then, in a public way, the subprime mess started to really unravel here in June. And in June, right about the 12th or so, is when the pound had the first crack in the armor, so to speak. Had a very short rally and then made a beeline for 9,700, prior support from the June move. Through August and September, the market did manage to climb back up, retracing a good portion of the prior down move, but then more subprime woes started to kick in, prompting another fast move down. Again, market managed to pick itself back up into October, and then for most of October, the market literally went nowhere, providing a very nice counter-trend trading environment. And then finally, coming into October, this is when the Fed really started kicking in with their easing language. And then coming into November, you've got a ton of money pumping into the U.S. economy. The Federal Reserve changing to a stance that was more, how should I say this, dumb, in my opinion. Basically, they're saying, well, to heck with the credit, we just don't want the economy to slow down.